So now, as you remember from last time, we talk about the cost behavior, how the cost behave. Now, the costs behave in two ways. They behave as a variable cost and as a fixed cost. Now, the variable we have under each category, we have two options: total, how they behave in total, and how they behave per unit. The interesting thing with the variable cost is, and any cost, if you want any cost, don't forget the cost is mathematical function of two variables. What are the two variables? Number of units that we buy and cost per unit. Now, some of those costs are necessity costs. Some of those costs we can eliminate. Variable cost is kind of cost that we can be eliminated and we can use it only when we need it. That's why the easiest way to you to save on the cost is to move from the fixed cost to the variable cost. We're going to see how this is going to happen. Why? Because in total, the variable cost always and always are proportional to the level of activity as long as we're in a relevant range. What was the relevant range? Relevant range is the level of activity when the variable cost behave as a variable cost and fixed cost behave as a fixed cost. And they don't change their behavior. That's the relevant range. So now in total, variable cost again is increasing proportional to the level of activity, or is proportional to the level of activity. Means that if we don't use it, we don't have to pay. If we use it, we have to pay. More we use it, more we have to pay. Now the questions will be, what will drive the cost? In the company, depends on the, is it manufacturing or it is merchandising company, different things gonna drive this cost. In the merchandising company, obviously the cost of the merchandises or the number of the merchandising that we're buying and selling, that's gonna drive the variable cost, total variable cost. More merchandising we're selling, more we have to purchase, more variable cost. Less we're selling, less variable cost. Then we're going to the point that in the manufacturing company, what can drive the cost in the manufacturing company? Well, different things. One will be the units produced. Why units produced? Because in manufacturing company, we have to produce those units. So more production we generating, more variable cost we have. Less production we're generating, less variable cost we're going to have. Now, if we're chasing the sales, and we already know that the sales is the one that's going to give us the revenue, obviously, reduction of the units produced is not good for the company. So basically, in that case, if you're in a manufacturing company, you don't have to be too much scared about the variable costs which are related to the units produced. Machine hours are another driver for this variable cost. More we're using the machine, more variable cost we're going to have. Less we're using the machine, less cost we're going to have. Miles driven or kilometers driven is another driver for the variable cost. And you already know, for those of you who drive the car, if you don't drive the car, cost for the mileage is zero. But if you start driving the car, more you're driving, more you have to pay for the gas. Labor hours is another driver for the cost, for the variable cost. More labor you need, more cost you have to pay. Less labor you need, less cost you have to pay. That's why probably right now, most of the company now moving to the artificial intelligence rather than staying with the labor. Why? I want to cut on the labor cost because I perfectly know that my employee, if they work more, I have to pay them more. Artificial intelligence, once I pay it, they don't have to pay anymore. It doesn't need vacation, doesn't need a stat holiday, doesn't matter is it Victoria Day or Prince Charles Day or what kind of King George, it doesn't matter what kind of day it is. It's just working. So the true variable cost always increase with the increase of the usage. And if we don't use it, we don't have to pay for it. Simple example, again, will be the price of tomato. Let's go with the price of tomato. So let's say we are the company that's manufacturing tomato tomato sauce or pasta. Tomato pasta sauce. That's what we're doing. So more tomato we need, more cost we have to pay. Less tomato we use in our pasta or the tomato sauce, less tomato we have to, less cost will be. If we stop producing the tomato sauce, there will be no cost at all. So the driver of our total variable cost will be the production of the tomato sauce. Now, per unit, however, the variable cost always stays the same. Again, within the relevant range. What that means? It's a flat line. That means the pounds or kilogram per tomato doesn't change. If you purchase 1 kilogram per tomato, is going to be $1 per kilogram. If you purchase 2 kilograms, $1 per kilogram. If you purchase 100 kilograms, $1 per kilogram. If you purchase 10,000 kilograms, $1 per kilogram. And that's going to stay within the relevant range. Now the question is what exactly will be the relevant range, but as long as the variable cost per unit stays the same, that means we are on the same relevant range. What we can see that in that case, the variable cost per unit is a flat line. And in accounting, believe me, we like the accountants and the people who use in financial statements, they like flat lines. They don't like fluctuation. You know, in some other discipline like a medicine, they hate flat line. When they see flat line, that means a dead person. They like fluctuation. In accounting, we don't like fluctuation. Fluctuation can bring you on the medical examination flat line. Why? Because people are getting too excited. When you see fluctuation on the stock market and you see that your price going too down, you might get a heart attack, which is going to bring you flat line in the medicine. But in accounting, when you see flat line, then you can be excited and you see big fluctuation of the happiness and sadness in the people's life. Right? Now, extent of the variable cost. So let's see which organization is going to use in the businesses, what kind of businesses, what kind of variable cost they have. For example, the public utility, which is the large investments, they're not relying on the variable costs. In the fund, the variable cost is very few. Large investments. Now, the latest large investment that the big corporation making is the investment for artificial intelligence. Why is that? Because they want to cut on the variable cost. Which one is the variable cost? Most likely, they try to cut on the direct labor. Maybe. We have to wait and we're going to see. Now, the other thing is what you can think about those large investment corporations will be, let's say, you are Toyota factory. And what you're going to do, you're going to open the new factory, which is largely involved with artificial intelligence, robots, and everything. And once you finish, yes, you're going to make a big investment, but then you're going to start producing the cars within next 10 or 15 years without using any labor, or the labor costs will be very few. For what? Just to monitor the process, and when the car is ready, just to drive the car outside of the manufacturer. Or the person just to make sure that you're changing the software or something in the software so you can change the cover, but already pre-set up, right? What's interesting with those large investments, and when you start relying on the robots, is that you can even cut on the utilities. You don't need lights to be on. The robot doesn't know, is it day, is it a night? It's just repeating the action and over and over and over and over. Is it dark? Is it light? It doesn't matter. And you can work on the start holiday, you can work on the long weekend, you can work whatever during the night, no problem. So That's a large investment. Yes, you're making a large investment in the beginning, but after that, over the period of time, that cost going to reduce. But let's go with the fixed cost, and then we're going to see why is that. Now, for the service company, they are going to have a high proportion of the variable cost. What that means is that once we start providing the service, more clients we have, more service we need to provide. And who provides the service? Usually, in this case, we need the labor. For that reason, we're going to have a high proportion of the variable cost. On the merchandising company, again, we're going to have this high proportion of the variable cost, which is related to the merchandises that we are selling. And usually the profit only is going to come from the difference from the buying and selling and the variety of the products that you have. You don't want to open a convenience store and to have 3 products, and when the client comes and say, oh, there's nothing in the store. You want to create a variety for the client so I can choose. But again, that's going to come with the high variable cost, mostly for the cost of the merchandises. Manufacturing company, again, many variable costs related to the raw materials and direct labors. That will be the key here for the manufacturing company and many variable costs. So let's summarize here for the variable costs. Merchandising company, cost of goods of the merchandise sold. That will be the very high volume, and that will be the biggest variable cost. Manufacturing company, direct material. Then we're going to have the variable portion of the manufacturing overhead, which will be the indirect materials such as lubricants and supplies. Sometimes even direct labor can be a variable and high volume variable cost. Power is another thing. More using the machine, more electricity, more power, electricity power you have to use. For the bulk merchandising, that will be selling general expenses, commission, clerical cost, shipping cost, and for the service organization, we're going to have probably supplies, travel, clerical cost, the one that we're using for our operations. True variable cost, again, the direct material is true or proportional variable cost because the amount is using during the period vary in direct proportion with the level of activity or in production in this case. So step variable cost, we may have step variable cost. So in the step variable cost will be the sources that we generating only in the large chunks. For example, here is the maintenance workers. Now, what I want you to know about the maintenance workers, and I'm going to give you an example with the hotel business, for example. For hotel business, how this works is you have people which are your maintenance workers, or this kind of will be people who doing the regular cleaning in the hotel. Now, if you have between, let's say, 10 or 50, depends on the size of the hotel. Let's say you have a hotel of 100 beds. So if the occupancy, you can see easily see the occupancy based on the reservation, based on everything. So if you're occupied on the 20% of your capacity, then you're trying to keep the costs lower. So what that means is you're going to have 1 or maximum 2 people who help you with the cleaning of the hotel. But if your occupancy increase from the 20 to 50%, then you're going to add another person there. So that's how you're going to have this step variable cost, which will change within the level of activity. So the small changes in the level of production are not likely to have effect. So basically, if I have 20 up to 20 clients in the hotel all the time, I need only 2 people to service. But if I have between 20 and 50 clients, then I need another person. If I have 49 clients, I still have another person. So that's going to keep me on that range on the step variable cost. So let's see what will be the linear assumption and the relevant range. The very true fixed variable cost, usually we can find it as a curve. Now, it's very hard for us to calculate the exactly curve changes in the curve. So for that reason, what we're going to do, we're going to choose a range under which range we have pattern of the cost, which can be expressed simply with the formula. And that formula will be correct only from this point to that point. And that's going to be our relevant range. So the relevant range is the way that the costs behave predictable, most likely straight line, and can be clearly expressed in the format with the formula. That's with the variable cost. Now let's see the other cost, which is fixed cost. Now fixed cost, again, since it's a cost, we have to consider it's a cost, and then that means that cost is equal to level of activity time cost per unit. But the fixed cost, on the other hand, it doesn't change in total. It stays the same. It doesn't matter how much you're using it, activity, it stays the same. For example for the fixed costs, easy example is the rent. Rent is your example. What's the fixed cost? What's happened with the rent? Rent is it doesn't matter how many people is going to live in the apartment. Are you going to live in the apartment or are you going to go out on the vacation? You still have to pay it. So it doesn't depend on how many hours you're going to spend in the apartment. Compared to the hotel, for example, where the hotel you're paying only for the night that you're spending in the room. Now the hotel, if you stay in the hotel, that will be variable cost. Where is paid the rent, that's a fixed cost. So again, fixed cost in total stays the same. So as you can see, it's a flat line. It looks exactly the same graph like a variable cost per unit. That's why we like variable cost per unit because it doesn't change, and we like fixed cost in total because it doesn't change. This is the stable ground that we can stay and use it for our assumptions. How about the fixed cost per unit? Well, the fixed cost per unit, since the fixed cost in total is not going to change, how many times we're going to use the activity, that's going to change the cost per unit. For example, let's go for ski, right? There was not much snow this year. It was not a good season for the skiers. I'm sorry. We hope next year is going to be better. But let's say you're going to, I know, Whistler is too expensive. Let's stay here in the local mountain. Let's go to Seymour. What's happened in the Seymour Mountain? Let's say you're going after 6 o'clock, so you're paying only for the evening, and you're paying lump sum. And you're paying only for the evening. So you're going there, and let's say you're paying $80 for the ticket, for the slot. Once you pay the amount, that's considered fixed cost, right? Because now you may decide to go back home. But if you go back home, you cannot even you didn't even ski. You just going back home, but the cost will be $80. If you go on the slope and you're running only once, then the cost for that one run is going to be $80. If you run 2 times, then the cost for the run is going to be $40. So what's your intention here? To stay and to run as much as you can. That's why using that if the lift working till 10 o'clock, you're going there and running until 10 o'clock until they say, okay, this is the last call for the lift, and after that, nothing. And you're there. Why? Because you want to utilize and to use the opportunity that you have to use this slope and to use this lift as much as you can. Why? Because you already paid the fixed cost. Same thing with the rent. Once you get the rent, once you pay the rent, your opportunity is to spend. I mean, if it's a nice place, you can spend as much as time as you can in there. And that's the only thing that you can reduce the cost. Unfortunately, we're limited to day of the month and hours per day, but there's nothing we can do with that. However, on some other activity, that might not be the case. For example, let's pretend that I believe we already went through this example, but let's do it again with the cell phone. Per month, you're paying lump sum, which is your fixed cost. Now, on that, let's say you're paying $50 for your cell phone plan. So that's plan including the unlimited text messages. Now, if you send only one text message and you pay $50 for the plan, and if you send only one text message, how much will be the cost for that text message? Obviously, it's going to be $50, correct? Can you guys hear me? So if you send 2 messages, the cost is going to be dramatically lower. It's going to go down to $25. If you send 10 messages, now the cost becomes $5 per message. So what's your intention here? To send us message as many as text messages as possible, because that's the only way, and that's the only way you can reduce the cost per text message. Same thing with the manufacturing company, and same thing with any business. Once they pay the fixed cost, they try to utilize that fixed cost. Once you pay employee a salary, and the employee you paying for the 8 hours, you want that employee to work 8 hours. You don't want him to work 7 hours. You don't want him to work 6 hours. You want that employee to work 8 hours. Why? Because you pay him for that. You want to get the maximum benefits for the cost that you paid. Now, that's how you're going to reduce the cost per unit. Now, the tricky thing is with the cost per unit, the cost per unit never going to become a zero. Why? Because you already pay for the lump sum fixed cost. So it doesn't matter how much you're going to use it. The cost can become 0.001, but it's never going to be 0. For the fixed cost, the other thing that I want you to know, this is thing that most people, they don't understand it. There are 2 types of fixed cost. One is called committed fixed cost. The other one is discretionary fixed cost. And committed fixed cost is the one that most of the time kills the businesses. Why? Because committed cost is something that you've already made commitment. It means you signed a document that you're going to pay that cost for the period of time. Now, if you get the income, committed cost, and if you have a steady income, which is coming on the regular basis, then you don't have to be super scared from the committed cost. In the contrary, you try to match that committed cost with the source of income so you can sustain on the long period of time and you can afford that cost. That will be the real estate taxes examples. Now, pay attention because this is the cost that most of the professional sports people, they don't understand. That's why it's very common in the professional sports world. Once the professional players stop playing, after the statistic is between 3 to 5 years after they start their active career, they bankrupt. 95% of those people. Why? Because during the time that they play actively professionally, they equip with themselves with a lot committed cost. On the time that they're playing, everything's fine. Life is beautiful. Why? Because I'm generating the income and I can pay for the mortgage of the house, mortgage of my house, mortgage of mom's house, mortgage of the some other people's houses. Plus, I can pay for the 5 cars that I have, so I can show my how good player I am. Plus, all the those symbols of wealth, which are related to the some kind of gold things, which is sitting around the neck, around the eyes, around everywhere, right? Every life is beautiful, but unfortunately, with the sports especially, there's a timeline, and when you pass that timeline, the opportunity of the income is disappear. However, those people are already equipped with a lot of committed cost. So the income stop, but the costs continue. And they continue on a very high level. By the time they figure out what to do and what's happening, all the savings are gone and they're back to zero. And what you're going to see them now? Going to start seeing them, they start as sports commentators or start showing on the commercials and here and there. That's how you're going to figure out that, okay, that person, he's already eat everything, committed cost already finished his income. Now he start looking for the new sources of income. That's the committed cost. So be careful with the committed cost. Be committed cost in the business, as long as business generating profit, you don't have to worry about it. But if the business stops generating profit or the profit goes down, you have to be able to start cutting that cost. But since it's committed, there's no options for you to cut the cost. So that's the vehicle that's the cost that drives the company down, which can be office lease, can be long-term assets, which you have to pay within over 5 or 10 years on anything like that. Discretionary costs, however, are a different story. Discretionary costs is still type of the fixed cost, but they are only paid once you need it. Once you don't need it, you can cut it out. Now, in your personal life, what will be example of committed cost? What will be the example of discretionary cost? Committed cost example will be if you go on the plan with your cell phone providers for 2 years. That will be pure committed cost. Why? Because your cost is going to be $50. If you want to cut it, yes, you can cut it, but you have to pay me the remaining on the plan for 2 years. So basically, you want to keep that cost. That's your pure committed cost. Now, that cost at some point is going to turn into be discretionary cost. When the plan is over. After 2 years, the plan is over. Now, you're going to continue with the same payment. The payment's not going to increase. But now you're not under the plan. So what that means, if you don't need it, you can cut it. Make sense? So that's the beauty of the fixed cost. It's still there, but you can cut it anytime. You can put this one, you have a lot of examples in our personal life that we have that one. The next one is the rent. Rent can be committed or can convert into discretionary. Some of the if you rent the place right now, they usually ask you to sign a 1-year contract that you're gonna stay there as in the rental. But after that 1 year pass, you can still stay in there month by month. Nobody's going to ask you to leave. But now, if you want to leave, you can leave anytime. Now, the tricky part that they don't tell you, you can leave even within 1 year. Why? Because you're protected by the BC government legislation, on the rental agreement. So basically, that rental agreement that says you cannot leave the place within 1 year of the signing the contract, that's legally is not gonna hold in the court. But since you don't know that, most likely you're not gonna challenge it in the court. So for that reason, if you have to leave early than 1 year, yes, you still can. But now you get the idea about the discretionary and the fixed cost. So, one thing that you have to understand now, knowing what the variable cost is, what the fixed cost is. Most of the company try to convert and to replace variable cost with the fixed cost. Example will be, even if you don't like it, I'm going to give you this example. Again, what's the most of the big companies doing right now? They're developing their own artificial intelligence. Why they're doing that? Because they prefer to have that fixed cost for the artificial intelligence, which they can spread over the time and cut on the variable cost, which is the direct labor. That's one example. The other example will be, now let's forget about artificial intelligence. Let's go to the humans. Imagine you have during the co-op season in Douglas College, you hired this Douglas student, but you don't know anything about the student, and you want to see his performance and everything. So you want to try it on the hourly rate for the 3 months of the co-op, or 4 months, because the period of the co-op has to match the term of the semester. So for the four months, you're paying that person hourly rate, and you see that person is very diligent, pay attention to details, finding the solution of every problems very easily. It's very well trained. It has the knowledge from Douglas College, and you want that person. You want to lock him for the long period of time. What's the natural way to lock that person? Well, offer him a steady, fixed salary. So move that person from our wage into the salary. That's one thing that I want you to understand. That's how now from the variable cost, he transferred to be fixed cost. Another great example for the transformation of the variable cost into fixed cost is this example. Imagine, I mean, there are many examples, but let's go with another one. Imagine this, cost for the gas. Cost for the gas of the car is naturally is the variable cost. Why? More you drive, more you pay. Less you drive, less you pay. However, you were hired for a company which is you're living, let's say, in Vancouver, and you get hired by the company which office is in Abbotsford. So you need to drive every day 30 kilometers back and 30 kilometers to the office and back. So in total 60 kilometers every single day. Now that cost now become a fixed cost. Why? Because you have to drive every single day. You're not planning to change the job because you like the environment, you like everything. So now you can see how from the fixed cost become from the variable cost, gas become a fixed cost. So what we have to conclude, on the long period of time, variable costs tend to behave as a fixed cost. Another great example will be the grocery. Grocery itself is a variable cost. More you buy, more you pay. Less you buy, less you pay. But the amount of the food that you need per month is constantly the same. Now, again, and now it's the cost of living going up. But if the cost of living stays the same, then the amount of the grocery that you're going to spend month over month is not going to change significantly. So that means from the variable cost, it tend to start behaving as a fixed cost. That's another thing that you should understand and pay attention in the business. Relevant range again is the another thing. A relevant range again is the range where the fixed cost and the variable cost behave as a fixed cost and the variable cost. Relevant range can be for the rent. Specifically for the rent, a relevant range will be the bedroom. If you have to rent apartment which is have a one bedroom, the cost will be between let's say 2,000 and 2,500 dollars. But if that apartment is too small and you want to move to the next relevant range, which is two-bedroom apartment, then the cost for that rent is going to move to new relevant range, which will be probably, I don't know how it's now, but probably 2,700 to 3,000 something. And if you're going to go to the next relevant range, which will be 3,000, three-bedroom, then the cost is going to increase again. So you have to be careful with this because usually for the fixed cost, usually when you're changing the relevant range, fixed costs tend to double. That's the normal behavior of the fixed cost. What that means? That means that most of the businesses that they don't realizing that. They don't realizing that a small change in the activity, when they move to the next relevant range, the fixed cost is doubles. There's so many examples of the businesses destroyed by the managers who decide to just, because of the small increase of the sales, they to move to the next relevant range. And when they move to the next relevant range, the fixed cost is doubled, but they're not utilizing now the fixed cost. They're in the very beginning of the stage of utilization of the fixed cost. And by the time they figure out that one, they already disappeared. The time frame for understanding those cost behavior is not much. It's one thing to pay, so let's say for example, let's say you're a coffee shop, right? You're a coffee shop, and you're running the coffee shop with 20 seats. You have how many tables? That will be that 5 tables, 4 chairs. That's your 20 seats. So you have a place for 20 people. Now you're monitoring, so the rent is for the area that you have. You're paying, let's say, $2,000 rent, and everything is beautiful. At some point, you're seeing that the demand of the people is coming. They start liking, and you see that you need 5 more chairs. Now, for the 5 more chairs, the owner of the company says, "Okay, I can offer you another space, but it's going to be double on size." So now I can fit 40 chairs instead of 20, but you need only 5 additional chairs. So, and you're going to move to that space, but now the rent that you have to pay is, instead of $2,000, is going to be $4,000. Okay, you agree with that, you're moving there. Now, if the rent is the only problem, is the only double in the cost, then life is beautiful. But that's not the case now. Because now, in order from 20 people to serve 40 people for the coffee shop, you have to have additional equipment. Plus, if you have some small fridge which you're providing some sandwiches in there, that's not going to have enough capacity for the 40 people that you have in the store now, or the coffee shop. So what you have to do, you have to double that one too. Well, that double means that you have to buy a new fridge, which double the cost of the fridge. Plus, you have to buy a new inventory, which is the same inventory that you have in the previous fridge. So basically everything double. But your sales increase with only 5 people. Why? Because on the new relevant range, you're not utilizing the 15 additional spaces, chairs that you have in your store. By the time you figure out what's happening, you'll be out of business. You need probably 2 to 3 months and you're out of business if you don't make steps. So that's why sometimes you better to, if you're utilizing all the capacity, you to stay on the current range rather than moving to the next relevant range where everything is 2 times more expensive. And you're gonna see it in your life. You're gonna see it once you move from 1 bedroom apartment to 2 bedroom apartment. You're gonna see what's happening. And the other thing is, you're gonna see it simply with living by yourself and another person, adding another person in your life, and everything doubles. And if you decide to add a third person in your life in form of a child, then you're gonna see what's gonna happen. And then you're gonna see that okay, the income stays the same, but now the expenses went up. Now, the same principles are for the business. Relevant range of activity, again, is the fixed cost is in the range of activity, which the graph of the cost is flat. Now, let's see this. Office space is available for rental at a rate of $30,000 in the incremental of 1,000 square feet. So as the business grows, more spaces obviously need to rent it. But if we rent more space, if you rent now, I cannot say to the owner, can I have another 10 square feet? He's going to say no. You can rent a new space, which is 2,000 square feet, but now the rate will be $60,000. And you're going to thinking, okay, if I might increase on the sales, is it enough to cover that additional $30,000 that I'm just about to spend right away? So how the fixed costs behave on the step variable cost? Now the step variable can be adjusted more quickly when this relevant range on the fixed cost, it's very hard to adjust. Sometimes you cannot even adjust it. So which one of the following statements about the cost behavior is true? Now I need your participation here in your activity, please. Which of the following statements about the cost behavior is true? First one, fixed cost per unit vary with the level of activity. Is that true? Are you guys there? Can you guys hear me? So first one, fixed cost per unit vary with the level of activity. Is that true or not true? Let's see the graph. I'm looking for the graph of the fixed cost. This is the fixed cost in total per unit, right? Fixed cost per unit vary with the level of activity. Is that true or not? It is true. Okay, good. I agree. Variable cost per unit are constant within the relevant range. Let's find the graph for the variable cost. I believe should be this one. Is that true? It is true. Now, total fixed costs are constant within the relevant range. Let's see, total fixed cost, it should be here somewhere. Let me find it. If I can find the graph, should be this one. Is it true? It is true. Okay. Last one. Total variable costs are constant within the relevant range. Now the question is that true? That one is the false. Why? Because total variable costs vary based on the level of activity. And this one, total variable cost constant. No, it is not. It's increasing, vary within the level, within the relevant range based on the usage. Okay. So the right answer, 1, 2, and 3 are the correct one. The last one is incorrect. So now let's see the next one. What is mixed cost? Next cost, once we have the variable cost and fixed cost, then we're going to have a mixed cost. What is mixed cost? Mixed cost is combination of both. It has a component of the variable, it has a component of the fixed. What would be the perfect example for this? Perfect example with this will be, again, your plan for the cell phone or your bill for BC Hydro. You don't know it yet, but if you take a look closely, you're going to find out that it's actually mixed cost. So let's go to the cell phone. The cell phone, you may have to, let's say you pay $50 or $50 for a monthly plan, which has 5 gigabytes data. What's going to happen if you reach the 5 gigabytes? You have to start using the data? No. The provider is going to say, don't worry, once you reach the 5 gigabytes, we can give you more. But for that additional gigabytes, you have to pay as it goes. So additional 1 gigabyte, additional $5. One more gigabyte, $5. So now you have the fixed cost, which is the $50. And if you need more usage for the as a gigabytes, you can add those one, but that will be the component now of the variable cost. Same thing with your utility bill. You're going to have one fixed amount, which is for the that will be registration with BC Hydro, and then there will be component based on the usage. More you use electricity, more you have to pay. So for that reason, let's see, for that reason, we can come up with the formula. Before I come up with the formula, I'm going to bring you to the Excel spreadsheet. Let's do some Excel spreadsheet activity. As you know me, I like the Excel spreadsheet. So let's go to that Excel spreadsheet. Just a second, I'm going to share my screen. For that Excel spreadsheet, what do we know? We know that the total cost is equal to variable cost plus the fixed cost, correct? But we also know that the fixed cost doesn't change with the level of activity. Fixed cost stays equal. What we know the variable cost? Well, the variable cost changes with the level of activity. So what we're going to have, number of units time cost per unit. So if I know the cost per unit, if I know the fixed cost, since the fixed cost stays the same, in order to calculate my total cost, I have to need the number of units that I'm using. So in that case, the total cost is always going to be equal to the variable cost or number of units. That will be the number of units time variable cost per unit plus the fixed cost. That will be my total cost. So let's go back to the slides. Let's continue with the slides. What we're going to see in the slides. Now, the same idea, but expressed with the different letters here. Y will be our total mixed cost. A will be fixed cost. B will be variable cost per unit. X will be level of activity. Why do we need this one? In order to calculate the cost. So if your fixed monthly utility charges are $40 and your variable cost for 1 kilowatt is 3 cents, and you're using electricity 2000 kilowatts hours for the month, how much will be your monthly bill? Well, we can easily calculate it. $40 is always going to be the fixed cost. The next thing that you have to do is to calculate what's the cost of the variable. What's the variable cost? And the variable cost, as you can see, is the 2000 kilowatts times 3 cents per kilowatt. That's $60. So the total cost will be $100. How can we analyze the mixed cost? And who's going to help us with the mixed cost? Well, we have two approaches. One approach is in the engineering approach. The other one is the accounting approach. Accounting approach is through the accounting system, we're going to see how the costs behave. And based on that, we're going to get some knowledge about the cost. And we're going to decide which one is fixed, which one is mixed. Engineering approaches, we're going to go to the engineers or manufacturers or whoever is involved in our production, and we're going to ask them which cost behave which way, and what's the variable, what's the fixed, what's the mixed cost. Why do we need all this? Why do we have to do and split the costs on the variable and the fixed? And why do we care how the costs behave? We're doing this only for one purpose. Once I know how the costs behave, I can predict the cost. Same thing, if I know how the students behave, I can predict what they're going to do. But again, in order to understand how the students behave, I have to monitor those students for the period of time. Same thing we're doing with the cost. We're monitoring the cost for the period of time. We're using different systems. We're using accounting system, we're using the engineering system, we're using artificial intelligence if you want. We're collecting all that data, and then we start to predicting. So basically, predicting the cost there's no difference between we being in the role of artificial intelligence. Now I'm going to show you a very simple way you to predict the cost. The simple way will be always with the formula. Why? Because again, we're relying on the fact that within the relevant range, variable cost behave one way, fixed cost behave the other way. And based on that behavior, we predicting that that behavior is not going to change. And then we can calculate the total cost. Again, that's what artificial intelligence is doing. Nothing more, nothing less. A very fast way, predicting the future. How? Based on the behavior. But how? Based on the mathematical models and mathematical calculations. The only thing is here I'm trying to teach you one calculation, which we're going to see in a few minutes. Using 2.5 hours, artificial intelligence getting all this formula within milliseconds. That's the unfair game. So one way to predict the cost based on the cost behavior as a variable and fixed is called scattergram plot. What we're going to do, we simply going to see what the actual cost behavior is month after month. Then we're going to try to draw a line which eliminates the fluctuation. We're going to come up with the formula for that line, and we're going to say that we have predicted how the costs behave. It's not perfect way, obviously, but it's a way. So once we create that formula, then we can come up with the formula. Scattergram plot analysis is not examinable. The only thing that I want you to know is that analysis exists, and that's all. The one that is examinable is called high and low method. Now, before we continue with the high and low methods, So for the high-low methods, what we're gonna do is we're gonna build on these formulas. We already know that the total cost, again, the total cost is equal to the number of units times variable cost per unit plus the fixed cost. So one way to predict, the whole point is to learn how, is there any way to predict the total cost? One way to predict the total cost is the high-low method. For the high-low method, what I need is the information. Information can be given in any kind of form, any kind of format, but you're always going to have a period of usage, usually in months or it can be in years, whatever you want. So January. And then we're going to have February, May, June. And those are my months. So now I have the months of usage. Let's label it months. Then we're going to have the actual usage, which in this case, we're going to use hours of maintenance or just hours. And the hours are 625, then we're going to have 500, then we're going to 700, 550, 775, and 800. Those are my hours. Let's make it more professional and easy for you to see it. And the last one is the cost, which is the total cost. So what means total cost? That means this total cost. I can easily put it here, total cost, or in as abbreviation is going to be this total cost. Let's put it this way so you can actually identify it as part of the formula. So the total cost, the first month is 7,950, 7,400, and then I have 8,275, and then I have 67625, 900, and 99800. This is my information. Now, what I'm going to do is going to put a dollar sign and make it like a number. Get rid of the zeros, and there you go. I have my total cost. So, if I want, let's make it a little bit more fancy so you can enjoy it. Let's put some colors. Let's put some shapes here and make it interesting. This one will be like this. Let's merge those cells. Let's merge those cells. Put everything in the middle, and that middle, this middle, and then now become a little bit more interesting. That will be my total, and the inside I can put this on the outside. It's going to be this, and now I have my table with the form, with the information. So what's my objective? Since I have this information, that's a raw information, as you can see, coming from exactly copy from this. Now, once I have this, what I need to identify? I need to identify the high and low point of usage of hours. Usage means that usage. So I'm chasing the high level and low level of usage. Make sense? So how can I get this? Very simple. You can get it with the formula. You can go here. High level is going to get it equal to the maximum of all these numbers. And the maximum of all these numbers is 800. And then we're going to get the lowest, which is lower is going to be equal to the minimum of all these numbers. And the minimum of those numbers is 500. Once we have the high level of usage and low level of usage, we're going to get the cost at the highest level of usage and the lowest level of usage. One way is you to type the numbers. The other one is to use the formula, which is called vertical lookup. So in the vertical lookup, you're gonna look for this value, and you're gonna look in this tray, and that should come from the column 2. And if you cannot find it, then it's gonna be false. And we're gonna find out that the highest usage is related to, on the highest level of usage, the cost is $9,800. Same thing, we're gonna do here. Again, we're gonna go to the vertical lookup, and we're gonna look for this value on this table tray. And once we find the number that we need, we want to extract the information from the second column. And if it's not, false. And we're getting the cost of the lowest level. Let's put it as a cost. And we have a high usage. Let's highlight it in green. And we have the low usage. Let's highlight it in red. Once we have those two, then we're going to do the difference. And we're going to see the difference in hours is 800 minus 500. The difference in dollar amount is 2,400. Once we have this information, the difference, that's for the usage of hours, then we're going to calculate cost per hour based on the difference. So based on the difference, we're going to calculate the cost per hour. Which will be, in this case, the cost will be our nominator, and the usage will be our denominator. And we're going to come up that the cost per hour is $8. That will be per hour. And that will be, if you want, that will be dollar per hour. So I have my cost of usage. Let's highlight it in some different colors. It's going to be, I don't know, this kind of color. So what will be that for me? So if I have to grab the formula, this formula, and think about it. Okay, so far, from this formula, I know my total cost is equal to the number of units times the variable cost per unit plus the fixed cost. Out of this formula, from only this line, I already calculated variable cost per unit. Now the question is, can I get the fixed cost? And the answer will be yes. However, I need to use one of those levels, either high level, either the low level. Now let's go and use first the high level and see what's going to happen. If we're using the high level, this is our high level point. Let me copy and paste it here as a number so I don't have to do the calculation again. Or maybe I should just read it from here. On the high level, how usage, I have usage of $800, 800 hours, sorry, with the $9,800. So at this level, what I can do is, using the formula, start applying what I know, what I don't know. I know that my total cost at the high level is equal to $9,800. I know that. I know that number of units that I'm using on the high level is equal to 800 units. I also know that cost per unit or variable cost per unit is equal to $8. I already calculated. So from this formula, I know the total cost. I know the number of units. I know the variable cost per unit. The only thing that I don't know is the fixed cost. Can I find it? Let's try and see. So if we have to start replacing the formula, what we're going to have? We're going to have 9,800 should be equal to bracket 800 units times $8 per unit plus the fixed cost. And let's put here $1 sign so we know this is dollars. So now can I express the fixed cost? Obviously, we can. Fixed cost will be equal to 9,800 minus, in the bracket, it's going to be 800 times $8 per unit. So let's see how much is the fixed cost. The fixed cost should be equal to, fixed cost, capital should be equal to, when I apply the formula, it's going to be this amount minus bracket this one times that one, close the bracket, boom. $3,400 is my fixed cost by using high method. Now let's see what will be the cost if we decide to use the low method. I'll put it here and let's use this low method, low usage. The information from the low usage. On the low usage, the hours that I'm using is 500 hours, and my total cost is 7,400. What I'm gonna do, I'm gonna exactly do the same information. Control C, Control V here. And what I'm gonna find out is that my total cost is $7,400. My units, the hours that I'm using is 500 hours. And the variable cost per hour is $8, which I already calculated. So at this point, what I'm going to do is I'm going to start putting everything in the formula, which formula will be 7,400 should be equal to bracket 500 times $8, close the bracket, minus plus the fixed cost. So from here, I can express the fixed cost. Fixed cost is going to be equal to 7,400 minus bracket 500 times $8. So in that case, my fixed cost should be equal to this amount minus bracket 500 times $8, close the bracket, boom. And magically are coming with the conclusion that in both scenarios, in the high usage and the low usage, my fixed cost is exactly the same. So that brings the question, do I have to calculate the fixed cost under the both high and low? No. Once you get one, obviously the other one will be exactly the same. So you don't have to repeat the same scenario over and over again, because at the end of the day, fixed cost is going to be the same. So now, once I know the fixed cost, then the things are a little bit more easier. Why? Because on the total cost formula, let's go back to the total cost formula, which is equal to number of units times the variable cost plus fixed cost. Now I know some things. Actually, a lot of things. I know that the total cost now is going to be equal to the number of units time. Cost per unit, I already know it. Cost per unit is $8. Plus the fixed cost, I already calculated. Okay, so once I know this formula, that's my basic formula. That will be the formula that I can predict the cost. Now the question is, can I predict the cost at this point? Then the logical answer is yes. So if the manager comes to you and say, hey, can you please tell me what will be my total cost next month? The only question that you have to ask him is, how many hours that will be maintenance? How many hours of maintenance you intend to work? Once you give me the hours, I can give you the total cost. So the other option is, what you can do is, one way you to calculate it, the other way to go to ChatGPT and ChatGPT to calculate it for you. If you want this, ChatGPT, see if that the ChatGPT actually can calculate it. What you can do is, actually, let's do it together. Let's do it. Let's try this one. Let's test this ChatGPT. Actually, can the ChatGPT give us this calculation? I'm curious now. I've never done this before in class. Let's do it. Let me share my screen. Which one I'm looking here? What is this? ChatGPT here. Sure. Let's go to ChatGPT and ask ChatGPT. Here we go. And this one is this is our calculation. That's what I want. And then let's ask the question. By using high and low method, give me the formula for the total cost so I can predict the cost. Let's see what's going to happen now. I don't want to use any emails. Probably it's not going to let me. Huh? Let's go to new chat. Clear the current chat. Let's clear the current chat. I don't want to, again, I don't want to register it like that. And let's see, by using high and low method, give me the formula for total cost. So there you go.
Ivan, you look disappointed that ChatGPT got it right.
Yes, I kind of look disappointed, yes. But it got it. And actually gives you the what is that? So step by step. So yes. So the only thing is you have to ask the right questions and put the right information. If you do that, you can get the results. I am looking disappointed, yes. I'm not gonna hide from you. But the thing is, do you see how fast this thing solved the problem? It takes literally less than 2 seconds. Now the question is, can you do the same thing in 2 seconds? That's what the question is. When the employer asks you, can you do this? w- Do I using the ChatGPT as my work as an accountant? No, I don't. I haven't used it. In my work as a professor, yes, I do. Does mean that I will be replacing a lot of junior accountant in the future. It doesn't mean anything yet. We need somebody to enter the information and to ask the right questions, right? If I don't put this information, if I don't know how to ask the right questions, then it will be difficult. Let's try something else. But now let's try something new here. Let's pause this one. I want to try something new. What is the total cost for uh, let's see, if that will be if 1,000 hours are used. Let's see if what's gonna happen now. Now ChatGPT getting a little bit interesting, right? Now it give you a completely different information, which is also correct, but now it's not using high and low method. And as you can see now that the average rate of the variable cost now become, instead of $8, become 12.87. And obviously that's going to change the entire picture. It's going completely different calculation by calculating the average per hour and come up with the new cost. Let's try another one. Are you interested in this? Let's go with this. What is the total cost if usage is 1,000 hours? Total cost if usage is 1,000 hours, and do the calculation using high low method. That should make it a little bit more easy. Now he's accepting as an image, analyzing this image, and then he should come up with the same idea. So as you can see, the first thing that we're doing is getting the highest point and the lowest point, which is the June and February. And then we calculating from the highest point, we're getting the differences, come up with the hours cost per unit on the high and low point. Then we calculating the fixed cost, and then we replacing in the formula, if we use this 1,000 hours, what will be the cost? So you can also draw a quick graph. Let's see what will be the graph of the estimation. Let's see if that one, what will be the graph that we're gonna see now. So if you I don't know. I don't know, but look at what's going on here now. This is a new reality now, right? So you can easily draw the graph here on the Python using the Python language. Can you believe this? So this is the okay. What can I say? Better say nothing, right? Let's stop here with this sharing and let's go back to our slides. Now, where does bring us? That brings us to the point that either you have to ask the right questions, either you have to know how to calculate this. Um, I don't know, at this point, yeah, I still want you to know this method because this method is going to be tested on the, this method, high and low method is going to be tested in your assignment and then going to be tested on the midterm. But with the available resources that you have, now we have available resources, what can I say? So let's go to our slides. Okay, that was interesting exercise. Let's go to this again, repetition of the high and low methods. We're gonna get the usage of the high with the cost, usage as the low with the cost. We're gonna find the changes. With the changes, we're gonna come up with the cost per hour, which will be our variable cost per hour. The variable cost per hour, we're gonna choose either the high level, either the low level. On the high level, we're gonna come up with using the high level, we're gonna come up with the fixed cost. Using the low level is going to be the same. The whole point is we to come up with the cost equation for maintenance in this case, which is going to help us to predict what will be the cost if let's say the hours that we're working are 1,000. What's the downside of this method? The downside of this method is this equation. This equation is valid only at two levels, at the high point and the low point. If you try to apply this calculation or this formula in any other level, it's not going to work. So let's see this one. Let's do one quick check without using ChatGPT now. Let's see if we can replace the ChatGPT. Somebody says B. Elena, yes, you'll be allowed to use Excel. I cannot stop you to not using the Excel. Also, you can the way I see it, you can use a Python too. So what will be the calculation here? Can somebody type me the calculation here? So what you can do is, no, you cannot do it now. Let's do something else, people. Let's do this. Yes. Kayana, yes. The answer is yes. Let's do something else. Let me save this Excel spreadsheet. What I'm sharing the question. I believe you already have available high and low calculation, but let's make it available again. Let's go here. Stop sharing this. And I'm gonna show you. What I want to show you is let me see which screen I want to share with you. Okay, I see it. I want to share this screen with you. So basically, on chapter 3, on the additional materials, I believe you already have, no, you have one or two cases here, but what I also am going to give you is this calculation for the high and low method. And let me upload it right away. Chapter 3, high and low method calculation, save. And you have it. Again, this one is under the chapter 3 materials. This is the course material, chapter 3. If you go to additional materials for practice, you're going to find it in the very end, chapter 3, high and low method calculation, the one that I just did in class during the Excel. I want you to download that one, please, and you can use the information. I'm going to show you in a second how to use the information to answer this particular question. So now, boy, I have to come up with some interesting ideas now. Since you have that available resources now, let's find what else I can give you so you can be more interested in this course. Let's save here. So both sections now, if I have students from the other section, they also have it available. Now, let me share my screen with the calculation and show you how you can use now the calculation with the question. So basically, you can flip it on the other screen, copy this one, move it to the other one. And once you have it on the other one, what you have to do is get any calculation. And what you have to do is from the slides, here from these slides, once you have the slides, you can change the numbers in the calculation. So the salary commissions are 10,000 of 8 units are sold and 14,120 units are sold using the high-low method. What's the variable portion of the sales and commission? So what you have to do is come to the point that we calculate this differences with the high and low. So what you have to do on the high usage, put here, high usage is 120,000 and the low usage is 80,000. Then you're going to have here for the high usage 14,000 and the low usage you're going to have 10,000. So I want to convert those one in the form of the numbers. And then we can come up with the cost per unit, which already is calculated. Now I have to do is get the right format. And you can easily see the answer is the one that you already comment on the chat, B. I believe somebody already said, Stephen already calculated that answer is B. Yes, the answer is B. So now once we know that, we can use either the high point or either the low point. But so on this point, we can use either the high level, either we can use the low level. Let's do it. And if we do that, we can come up with the fact that the fixed cost is $2,000. Once we have the fixed cost $2,000, I can easily come up with the equation, which will be, the equation will be number of units time. This will be 10 cents. 0.10 here. and my fixed cost is only 2,000. And that's my formula. Now let's go to the slides. I stop sharing this. Let's go to the slides. And so once we know that the correct answer here is 10 cents per unit, to come up with the fixed portion, we already come up with the fixed portion. Is it using either high, either the low method? And we come up that the total cost will be, fixed cost will be $2,000. Once we have that one, then we can start predicting the cost. Now, this is the one way to do it. The other one is the third method that you can use is the least square regression method. It's very complicated. I'm not going to spend time with you. I'm not going to explain this method. Just want you to know that you have it available. Practical application of this method is, I haven't used it yet in the practice, honestly. Now the CPA starts putting some questions. I saw they putting on this least square regression method, but that's only on the level of the prep courses. So I'm not going to spend time for this method. So it's not going to be examinable. Now, the last thing that I want we to cover today is related to the presentation of the income statement in income statement format. So we have on the basic everyday life, we have a traditional income statement. So for the traditional income statement, I'm going to use again the Excel spreadsheet so I can explain that one to you. So open another worksheet here and make it bigger and start working with this Excel spreadsheet. So the traditional income statement starts with sales. Then we can have cost of goods sold. After that, we're going to have a gross margin. Then we can have operating expenses. And we're going to finish with operating income. And that will be our traditional income statement. Very, very briefly explained. So what's going to happen if I have to put some numbers? Let's improvise with some numbers here. Let's say the sales are 10,000. And let's put those numbers formatting in the form of with the decimals with like this 10,000 cost of goods sold. Let's say the cost of goods sold 4,000. And then we're going to have gross margin, which is equal to 10 minus 4. 6,000 operating expenses. Let's put operating expenses 3,000. And then we're going to have operating income, which is gross margin minus the operating expenses. And that will be our traditional income statement. Now, traditional income statement, it's good, but that's for the external users. Okay? That we're going to use it for the external users. For the management accounting purposes, we're going to use another form of statement, which is called contribution margin income statement, which also is going to start with sales. Don't get me wrong here. We cannot change the sales. The sales is going to be the same. Let's make it bigger like this. We're also going to start with sales. Operating income will be exactly the same. But for the costs, I'm going to do something else. Let's insert some. What I'm going to see is from the traditional income statement, I can easily see that cost of goods sold and operating expenses are my expenses, which the total expenses in this case are my cost of goods sold and operating expenses, which are, as you can see, 4,000 and 3,000. Total is 7,000. Now, for the purpose of the contribution margin income statement, I cannot change the cost. Operating the total expenses also is going to be $7,000, but I can change the classification of the expenses. Right now, they're based on the nature of the expenses. I can change it on the behavior, with how the costs behave. So what I'm going to do, I'm going to pull out cost of goods sold. I'm going to pull out the operating expenses, and I have only two options. Either it's going to be variable cost, either it's going to be fixed cost. And based on those, I'm going to prepare the new income statement, which again, sales going to be exactly the same. Operating income is going to be exactly the same, but now in the middle, it's going to be different. No many more cost of goods sold, but it's going to be now called variable cost and the fixed cost, nothing more, nothing less. So we're going to have here variable cost. Let's say, for example, variable cost, let's change a little bit the numbers. Need to get, let's say the variable cost is 6,000. That gives me, now the next thing that I'm going to do is, once I get sales minus the variable cost, that's going to give me my contribution margin. And my contribution margin here is 10 minus 6, 4,000. And after that, I'm going to have the fixed cost. And the only way to work is my fixed cost has to be equal to 1,000. So now I still have the cost, total cost is still $7,000. But now the classification on the cost is not based on the nature, but mostly on, only by how the costs behave. Why do we need this? Because next time we're going to start doing cost volume profit analysis, which is what will be the effect on operating income if I change the volume of the sales, if I change the cost, and which cost affects my operating income and how exactly it's affected. That's what we're going to start doing next time. The other thing that we know for sure here before we continue with the slides is that sales are always 100% as a percentage. Why? Because sales divided by sales are always 100%. It's 1, so that means 100%. So the next thing is, can I express the cost of goods sold as a percentage of sales? Yes, we can. Can I express the gross margin as a percentage of sales? Yes, I can. Same thing with the contribution margin statement. 100%, the sales are 100%, and after that start expressing the different elements of the contribution margin income statement as a percentage of sales, which will be the variable cost here as a percentage of sales, contribution margin as a percentage of sales. Let's go back to our slides. And again, on the new income statement format, traditional formative income statement is organized by the function. On the new statement contribution format, we're gonna separate the cost and we're gonna present it and organize them by fixed and variable. So again, sales are 100, variable cost 60, contribution margin 40, fixed cost is 30, operating income is 10 in this example. So from where that comes, that's a different story. We're gonna leave it for next time. Why do we need that contribution format income statement? Again, so we can do the cost value profit analysis next time. For the budgeting purposes, we're gonna use it. And we're gonna use it for the segment reporting and special decisions. Again, if we have to do the comparison between both statements, sales always gonna be the same. Operating income always gonna be the same. The presentation of the cost is gonna be different. On the traditional, which is for the outsiders or the external reporting, we're gonna have cost of goods sold, gross margin, operating expense. For the management purposes, we're gonna keep it as a variable expense, contribution margin. Now the gross margin is gonna convert to contribution margin, fixed expense, net operating income. So if you see the income statement, which has cost of goods sold, gross margin, traditional approach. If you see income, which is dealing with the variable cost and the contribution margin approach. Also used for the management purposes. This is the explanation for the square regression calculation, but I'm not going to spend time with you, and I'm not going to expand that one. Is the contribution income statement mandatory for the accounting managers to produce? No, it's not. Absolutely not. Again, don't forget, everything that I'm going to teach you in this course is not a mandatory. However, you won't be able to make any decisions in terms of sales, of the continuation of the production, of what's the cost of the product, how much each product contributes to the company wealth, if you don't do some special reporting. Again, you can stay with the general reporting, which is for the external users, but you won't be able to make any management decisions until you start producing management report, which the management report will be very narrow, very specific, and using the different classification of the cost. One thing that, again, I'm again repeating this, you cannot change the cost. You cannot change the pass, but you can change the presentation of the report. You can change the point of view. You can change the tools that you're using in order to get a different type of information, which is going to help you to make a different type of decisions. You always have to understand, you can look at the problem on one angle and you're going to see one things. If you change the point of view, then you're going to see different things. If you change again point of view, you're going to see third things. The question is, can you change the point of view? And how fast you can change the point of view in order to see the different things. You see, if for example, if I haven't used today ChatGPT, I won't know that when you put the information in run, you're going to get this calculation within 2 seconds. I went to the same calculation. It took me probably 20, 30 minutes. Yes, of course, I'm explaining step by step, but you see in the other reality, this one is done within the 2 seconds. Questions, people? That's I'm not going to, the appendix 3A, it's not examinable, so we're not going to go this least regression and the calculation. Questions? For the variable cost, what kind of cost is groceries? For example, is it variable cost? Is it fixed cost?
Would that be fixed cost since we need to eat?
On the long run, yes. Definitely on the long run, it's going to be fixed cost. But on the short run, if you look at the short run, it's behave as a variable cost. Why? Because you can cut it, can you? But for the short period of time. Don't cut it for more than 2 days or 3 days. Only with the medical supervision from your family doctor. If you want to cut the grocery shopping and got the intake, only with the medical supervision, but don't go crazy more than 3 days. 3 days is fine. That's actually healthy. But after that, you still have to go back. So yes, I can stop doing the grocery shopping, but I cannot eliminate it. So it's kind of necessarily evil. Now, in comparison to the true fixed cost is the one that most likely you already committed to it, unless it's something that you just paying after the commitment. Now, the other example that I'm going to give you is knowing this and knowing how the costs behave is very important in a very kind of tricky situation in life. In terms of, let's say you, for some reason, you lose your job. What's happened now? The income stops. Okay, so what can you do? Instead of sitting and crying and thinking that that's the end of the world, no. Sit down and start thinking, which one is the variable cost? Which one is the fixed cost in my household? Which one of the fixed costs I don't need is first, which one of the fixed costs is committed? Which one is the discretionary? Obviously, on the committed cost, think about it. Which one is necessarily, which one is not necessary? Committed costs, again, you don't have much flexibility. You cannot cut it. But on the discretionary fixed cost, yes, you can cut it. And then you think, do I need this cost right now? If the answer is no, cut it right away. Don't spend 2-3 days. Do it exactly on the time if this happen. Then eliminate the fixed cost that you don't need. Be careful on the variable cost. If you want to reduce some of the variable costs, you have that opportunity to do it. For the time being, you can cut some of the variable cost or reduce the consumption or reduce the usage of that variable cost. And that's going to give you more time you to go through this temporarily time in your life. And once you get back on the feet, once you start getting the regular income, you can go back to the normal spending. But you won't be able to do this if you don't understand the costs and if you don't understand how the costs behave. That's one thing. Surprisingly enough, most of the people, they don't understand that. Even though you're seeing so many information, even you have this reality show which going over the cost, and you're having those one that reality show that shows you that there's some manager with questionable knowledge, but she comes with the idea how to control your debt and what kind of plan you have to make in order to control your debt. Seriously? Why don't you just take one intro managerial accounting course, pay attention, and you can start your reality explaining to people how they control their cost and how they can control their behavior. Why? Because you already know how the costs behave. The only thing that you need is how the people behave. When you combine those together, you can easily come up with your reality show. And you to become a next YouTube star, which explained to people how can become wealthy by controlling the cost. Simply by controlling the cost. Or you can use it for your personal usage. That's why it's important for you to see the practical application of this course. Because the practical application, yeah, you may not open your own business. You may have to work with somebody else, but you already have your own business, which is called household, which is called your personal finances. Believe it or not, that's also kind of business. Because again, generating money or profit. And you have your customer, which is your employer. And you have your production, which is you. The product is obviously you. So you're running your own business. What you need to do and start predicting. That's how you can save money and budget for the next vacation or the next extension of your business in forms of leisure or in form of a break from all the stress, and give yourself a benefit for having this and having that, which is going to make you more motivated to go back to work after a long weekend, or pay more attention after a long weekend, right? But that's how you can use this course, and I really want you to start using this course. I believe I told you the previous time. What I want from you is, in order to get more understanding of the cost and get more comfortable with the cost, start thinking, please, as a manager. Please start thinking as a manager. As soon as you do it, you're going to get better benefits on this course. And the simple thing that you can do is go around. You're going so many places in your life, so many places. Think about it. What kind of cost is this? Is it a variable cost? Is it a fixed cost? If it's variable cost, what can I do? If it's a fixed cost, how can I use it for my benefits? And if it's a fixed cost, am I using it enough? Next time we're going to show you some other calculations when we start doing the cost volume profit analysis, and you're going to see a little bit different perspective in terms of the cost, and how you can understand, am I utilizing the fixed cost, which I'm already paying for, or I'm just letting them die? Means that I'm throwing the money in the garbage. Because that's another way you to increase your wealth. Remember, the wealth is not always going to come with the income. Wealth, it may come from the cost saving or utilization of the cost, or be more alert on the cost behavior and doing the right decisions about the cost. When you have to flip to the fixed cost, flip to the fixed cost. If you have to stay on the variable cost, stay on the variable cost. But know about those things, and then it's easy. That's why you can easily come up with this idea. What is easy for me? Go to the restaurant and pay fixed cost, or go to the restaurant or pay variable cost. Can you give me example? I think we already went through this, but again, can you give me example that when you go to the restaurant and paying fixed cost versus going to a restaurant and paying variable cost? What will be that? Tips are variable cost? No, I'm not talking about the tips. I'm talking about the food. Give me example with buffet. Thank you. When I go to buffet, what kind of cost is that? All you can eat, yes, it's a fixed cost. But at some point you start thinking, okay, I'm paying but it doesn't make sense you always to go to the all you can eat. It makes sense only when you're hungry and we can eat the amount of the food, which will be more than if you go and pay by portion of the food. Make sense? If you just and you usually know that I will be full with 2 dishes, for which dishes, if I'm paying as a variable cost, is not going to cost me more than $30. Doesn't make sense to go to the buffet and spend $50 on all I can eat and to eat like a crazy just to justify the cost of the all I can eat. Because most of the time, what I'm catching, I mean, obviously, when you're young, your how can I say, your digestion and everything, the metabolism is super fast. So you're burning it fast. But at some point, you're going there and you know I pay so much. And I know if I order this food on the variable cost, I don't need so much to fuel myself. And at some point, you're finding yourself that you're eating like crazy just to justify and make it make sense of the fixed cost that you already pay for the food. Have you been in that situation? Have you feel that way? Or not yet? How many of you been in the all you can eat? All you can eat hot pot, yes. Chicken wings or sushi, right? And then bringing the sushi one after another, one after another, after another. You just try to justify the cost because you usually know that if you order 3 rolls of sushi, you'll be more than full. All right. Then we're going to discuss more about. We're going to come next time. We're going to still continue building on this variable cost and fixed cost, and we're going to use it for the cost volume profit analysis, and we're going to see what's the connection between the cost, the volume, and the profit. I'm going to draw some chart. I might use ChatGPT again to come up with some calculation and some fast calculations, some fast charts. Probably I'm going to use for the graphical purposes so you can see actually the graph, and if we can change the graph faster based on because when you what I can see is calculation is super fast, so that's going to give us a chart which we can easily manipulate it. Can we use it artificial intelligence during the exam too? Well, what can I say? What can I say? I will say, we'll put it this way. You may, but let me see. The way I want you to use artificial intelligence is in the intelligent way, which you can make take the intelligent benefits of the artificial intelligence. If you use it only to solve the problem in which you don't put your mind and which you don't understand anyway, but yes, you're getting the right answer, then the usage of that artificial intelligence will be useless. But if you use the artificial intelligence to develop your knowledge and become better on the analytical part and the calculation part, yeah, go for it. Yes, the exam is going to require you to lock your browser, unfortunately. But again, I cannot stop you. And I don't want to stop you to use the artificial intelligence because, again, you have to start using it at some point. But I want you to use it responsibly. In the responsible way, which creates value for yourself. Do you understand what I'm trying to tell you? Totally agree. In the way it's easy. It's better to explain some way if you cannot find explanation, or if I cannot explain it. Obviously, are we going to the point? Can I explain the way that artificial intelligence explained? Before, probably when the artificial intelligence was 3 months old, maybe I can explain it better than artificial intelligence. So right now, it's an unfair game. I have, let's say, I have capacity of my brain, which capacity of my brain I'm using to probably 7 or 8, maximum 9%. Artificial intelligence using 100% of the capacity. It's an unfair game, sorry. How you can supposed to use Excel if the screen? Well, that comes to your imagination, my dear. Now, what I can suggest you